Okay, so we start now. Okay, Nemis?
Yes, please go ahead.
Okay. So good afternoon, everyone, and welcome to ERF webinar. So my name is Najat El-Mikawi, and I'm very happy to share this session. And we have a session dedicated to SMEs. And we have two speakers. I'm very happy to welcome our speakers. So Bedri Kamil Onurtaz from Tab University, and Dr. Hadi, and Dr. Bedri, of course, and Dr. Hadi Salehi Esfahani from University of Illinois. So please, you have 15 minutes for your presentation and between 15 to 20 minutes maximum for your presentation. And then we will keep 10 minutes for the discussion. And at the end, if we have enough time, we will take the Q&A. So please, we can start with you, Bedri.
Okay, so I'll share my screen now.
Thank you.
Okay, so thanks for joining. And this is a joint work with Bernard that he started working last year. So in this paper, what we are trying to do is we are trying to investigate a very important topic, which is public procurement, public purchasing, and try to examine the policies that are designed to improve SME participation, whether that is working or not. That's an empirical analysis. So the motivation is, so we have small and medium enterprises, and for all of the countries, almost all of the countries, it's a very important part of the economy. For some of the countries, it is like close to 90%, and it's more than half of the total employment globally. And also in the MENA region, 96% of all registered companies are SMEs. So, and public procurement also consists of a very important part of GDP. So it is essential for SMEs to have access to public procurement markets, both to improve the competition in public procurement markets, to improve cost effectiveness, and for SMEs so that they will be able to have access to these important markets. Also, it is essential for SMEs so that they will be able to grow and participate to the general economy. So that's why many countries have established policies to support SMEs, and some of these are designed to support SMEs participation in the public procurement market. And we know that public procurement is 15 to 20% of GDP in the Arab world, and this is also similar for OECD countries, like to close to 13%. So it's a very big part of the economy. So that's why it is essential to promote SMEs and so that they will be able to participate in this very important market, and they will contribute to the economic growth. So in this paper, we have a detailed data set that allows us to investigate SME participation and whether this SME participation is affected by government regulation to regulate public procurement. So this data set is about 32 European countries. So that allows us to have variation in government regulation and also in SME participation so that we can conduct this empirical analysis. And what we do is we investigate whether the differences in public procurement quality, so whether countries that have better procurement systems, and so we have measures for that quality. So countries with better public procurement policies and regulation, do they have higher participation by SMEs, and also whether SMEs are more likely to win contracts in those. Okay. So Okay, so let me talk about our main results, and then I'll talk about the empirical part of the paper. So we find that the quality of public procurement has a statistically significant positive effect on SME participation. So in countries that have better public procurement regulation, then SMEs are more likely to participate in public procurement contracts. And also quality of public procurement regulation improves the probability that an SME wins a contract. So in countries with better public procurement regulation, SMEs are better off in the sense that they have more access to procurement markets, and also they are more likely to win contracts. And also we investigate other government policies like the procedure that is used by the authority. So when a government entity employs open procedures, which is a definition by the European Union for first price auctions, then SMEs are more likely to submit those kind of government contracts. And also there is this debate about whether dividing contracts into smaller parts so that SMEs will be able to participate. And there are many policies that require this in many countries, and we find that this really works in the sense that when the contract size is small, then SMEs are more likely to submit bids, so they have more access to public procurement markets. So a little bit why we are interested in this and why public procurement regulation might play a role in promoting SME participation and SMEs winning public procurement contracts. So regulation, so a paper by Bernard also states that it levels the playing field for both foreign firms or also for SMEs, and when there is improved transparency, then small firms might benefit from that. But this is an empirical question, so it might have both a positive effect or a negative effect, and we find that it has a positive effect. Okay. So our measures, so we need to of course we have 32 European countries, and we would like to investigate impact of public procurement regulation. So we need different scores, so we need variation to be able to do this analysis, and we need scores. And a World Bank working paper prepared as public procurement regulation quality score for more than 140 countries. And what they do is they conduct a survey, so they ask authorities and public procurement experts and experts at the firms about the quality of public procurement systems in their country, and they get answers and they prepare a score out of that. So their score, the World Bank score, has 3 dimensions, which is first one is bid preparation, and the second one is content and management of procedures used to award contracts, and the final one is payment of suppliers, whether it is late or not. So it has 3 components. And also their paper, what they do is they take the simple arithmetic mean of these scores to get an overall public procurement score. So we use that to differentiate among EU countries. And okay, I need to be quicker. And we also have an alternative measure, which is provided by DigiBist. So again, this is a EU-funded project. What they do is they hire lawyers and experts in 32 European countries, and they fill out questionnaires about the quality of public procurement, and they also assess laws and regulations about transparency, whether an authority can conduct direct purchase easily without advertising the contract, and so they consider the lawyers consider these kind of rules and they provide a score. So we have an alternative score for the European EU countries provided by this DGVIST project, and this has a time dimension. So we are using that time dimension also. It has annual data from 2012 to 2017. So this is just a summary statistic of the World Bank and DGVIST public procurement indicators. So they are on different scales. The World Bank PP overall index is from 0 to 1, and European, which is DGVIST score, is from 1 to 100. So, but you can see that there is quite a bit of that standard deviations or the variation in it. Okay, and we also have this graph for different countries, for 32 different countries. For the World Bank score, the highest one is Italy, and the smallest one is UK. For DGVIST, we have Slovakia and Hungary. Italy again has a high score, but it is more like 72 compared to the highest one of 78. And Iceland has a lower score, lowest score. So when we look at the methodology, this is mostly caused by DGVIST is mostly looking at the laws and regulation part of it, and the World Bank is analyzing more experiences of firms and authorities by conducting a survey. So it is capturing different parts of public procurement quality. So in this sense, we are analyzing also different components of public procurement quality using two alternative measures. And this is a picture for public procurement quality scores from the World Bank, so that which countries have higher quality. You can see that US, Canada have higher, and countries in Africa is significantly lower scores. And also for the MENA region, we also have policy implications for MENA region, and for MENA region compared to the EU, since we are analyzing we are using the EU data, it is significantly lower public procurement score. DGVIST is only for EU, so we don't have a score for many countries. Okay, so you can see that the World Bank scores for many countries. So as I mentioned before, I can skip this one. We are using World Bank and DGVIST to measure public procurement regulation quality, and we are using TED database. This is a very extensive database about all of the contracts above a threshold value, so they are recorded. So we have more than 2 million observations about each contract, and but it is whether SMEs are participated is also recorded. So we have SME information for years 2016 and 2017, a total of more than 1 million contracts. And what we know is we have data about SME participation for 205,000 of them. So we analyze these ones, and 67% of these are won by an SME, and we know that 80% of them are divided into lots. So we analyzed 3 empirical questions: effect of PP regulation, public procurement regulation on participation, whether SMEs are more likely to win contracts when the country has a higher public procurement quality score, and also whether the policy that dividing large projects into smaller lots has an effect on SME participation and probability of winning a contract. So this is our regression equation. What we do is here we have the ratio of SMEs to total number of participants, and we have many control variables, so we don't have time, so I will not talk about all of them in detail, but we have the dependent variable is ratio, and PPQ is the public procurement quality score, and we have many control variables. So this is the first empirical result. We also control for endogeneity using instrumental variable GMM, also heteroscedasticity based instrumental variable GMM. So we would like to get robust empirical results. As you can see, the World Bank public procurement score and also the DigiVist public procurement quality score, they all have significant and positive coefficients, indicating that SMEs have a higher ratio of participation when public procurement the public procurement regulation score is higher, so better public procurement systems. And the second question is about the probability that SME winning a contract. So we use a logit regression equation, and also for robustness, we also analyze a linear probability model. And we see that both logit and linear probability models provide similar results. Also, both for World Bank and the DigiVist score, what we get is when the public procurement regulation quality is higher, SMEs are more likely to win contracts in those countries. We also control for indigeneity. We have many control variables, but I don't have too much time. And finally, what we do is we would like to see whether dividing contracts into smaller lots has a significant effect of an SME winning a contract. So we conduct a threshold regression analysis for that. So we would like to see whether there is a threshold for contract size that affects the effectiveness of this policy. And what we see is a lot size matters in the sense that when I would like to mention that the threshold regression determines the value of the threshold. So it's not something that we impose. It is determined by the threshold regression. So when the contract size is smaller than 23,000 euros, then dividing these contracts into smaller lots works. So when the lots are smaller, SMEs are more likely to win contracts. Okay, so let me briefly talk about policy implications for MENA region. So as you can see, the MENA region and other parts of the other country groups have significantly lower public procurement quality scores compared to the EU. So we use that to see how that would contribute to whether there is an improvement in public procurement quality score will help. So as you might imagine, if the public procurement quality increases, so these countries would be able to benefit from that, starting from many African countries.
Friedrich, please.
Yes.
Friedrich, excuse me, you have to conclude.
Yes, okay. So finally, we also calculate potential benefits for MENA countries. So we can say that when these MENA countries improve their public procurement regulation scores, they would be able to improve SME participation by this much and also winning participation. Okay, I can stop here because that's the conclusion. Thanks for listening. I tried to be very quick.
Thank you, Bedri. Let's move to Hadi, and then we will have the discussion after the Hadi presentation. Thank you, Bedri. Please, Hadi.
Thank you. So let me share my screen and start my discussion. Okay, thank you, Najat. This paper is about credit extension policies and how they perform. Let me go over the motivation for the paper first. The policymakers, politicians boast about their job creation record, and they want often to do it very quickly. And how to do it? Well, large firms are very capital intensive. It takes time. They need entrepreneurial and managerial skills. Could be too slow and too costly. Small and medium enterprises might be a better vehicle for creating jobs quickly, especially because they're labor intensive. And they also happen to be credit constrained. So if one can actually solve their credit constraint problem, might be able to encourage SMEs to create a lot of jobs quickly. So this is what a motivation that policymakers have to focus on solving credit problems for SMEs. Of course, there are other things that policymakers could do, like credit, not just creating credit opportunities, but also training, business support services, etc. And many studies try to compare these various options, but credit provision seems to be a key component and most likely to succeed in many situations. So this literature is relatively large, and there are a couple of very interesting recent reviews of the literature. The conclusion of these reviews is that the outcomes vary a lot across cases, countries, and interventions, but generally there seems to be a positive effect, but mostly that's focused on micro enterprises, not small enterprises, enterprises less than 5 workers, not firms that are up to about 50, which are considered small firms. So the other conclusion is that even though the effects are positive generally, the net effect seems to be, the magnitude of the effect seems to be small. In terms of the type of effect that we see as a result of credit policies, there's increased investment in capital accumulation. These policies don't seem to have much impact on productivity, and investment also most of the time takes the form of increased inventories in many countries. There's no study of variation in outcomes so that we could figure out why is it that these policies succeed more in some countries compared to others. And this is important because the policy design, implementation process, context of the policy seems to have an impact on the outcome. The design of studies also seems to matter in terms of what one finds. Randomized controlled trials are, of course, gold standard for this kind of research. When it's feasible to do randomized controlled trials, that's the best option. It's a costly method, of course, and has not been applied, in fact, to SMEs. It has been applied to micro enterprises. There's another problem with the RCTs because they may have a problem of scalability. Usually a sample is selected, and within that sample, one group is treated, the other group is not treated, and the results are compared. But if one wants to do this for the entire industry, for the entire country, the effect might be different compared to the sample, especially because policies that are applied to large numbers of firms might have macroeconomic consequences, and that has to be taken into account. The alternative type of study when RCTs are not feasible is propensity score matching. This is relatively more common nowadays, especially for small enterprises. But the problem is that there are a lot of unobserved factors that could be biasing the results. The third option is natural experiment studies. These studies depend on some policy change that can be considered exogenous, and the impact on different types of firms could be studied. This is, of course, a good solution to the problem when randomized controlled trials are not available. However, it also depends on the existence of the data and such a policy change that can be considered exogenous. In this paper, we focus on a particular policy experiment, a policy change that was rather significant in Iran, started in 2005, and after 2008, it was wound down, and eventually it was ended in 2011. So this policy focused on providing credit, facilitating credit for firms that were less than 50 workers, had less than 50 workers. It was called the Plan to Extend Quick Returns Small Firms. And the idea was that each firm would propose a project that they would employ 2 to 5 workers in addition to what they had, and the government would basically press banks to provide funding to the extent possible to these firms. And this plan can be considered exogenous to what was happening in the industry and for individual firms, because there was a surprise election of President Ahmadinejad, and then in summer of 2005, and then by November, this policy had been adopted, and then continued until 2008 when it was reduced substantially, and therefore we could look at what happened in between those dates, especially in 2006 and 2007, and see whether it had an impact on employment, on capital accumulation, etc. So the aim was to create 1 million jobs per year by encouraging entrepreneurial activity among SMEs. And here's the data to just give you an idea how many firms proposed projects in Iran. The policy started in 2005, but that year there wasn't much activity because it was towards the end of the year. In 2006 and 2007, as you can see here, a lot of projects were proposed, and many of them were accepted for funding. And eventually, based on the numbers in the projects and claims of the firms of how many workers they had employed and they had kept, then there were about 250,000 jobs created in 2006 and about 300,000 jobs in 2007. So this, of course, doesn't take into account the fact that the firms might have hired people for these projects but laid off other workers. And that's what we tried to do to figure out what was the net effect. This case is important and interesting because it highlights many caveats that such programs might have. Employment in SMEs in Iran declined, in fact, soon after the implementation of the policy. And since the policy can be treated as a natural experiment, we could actually deal with a lot of simultaneity issues and figure out how the policy might have affected hiring of workers, capital accumulation, and other characteristics of the firms. To give you an idea how things look like in terms of employment, this graph shows you employment in small, medium, and large firms in Iran. And as you can see, after 2000, the employment in small firms was increasing gradually. It continued to increase in 2006. And after 2007, actually employment in small firms declined rather than increase despite this program. In terms of capital accumulation, one can see here that capital accumulation was actually strongest in larger firms, but it also continued to increase until 2007 in small firms, after which capital accumulation slowed down substantially and actually declined later on. So what do we do in this paper to analyze the impact of the policy? We compare firms that had 45 to 49 workers with firms that had 50 to 54 workers. So two groups that are almost similar or close to each other, and we use the 50 to 54 group as the control group, and firms that had 45 to 49 workers were eligible to get credit from the banks based on the policy, and therefore they were exposed and they could be viewed as treated. The way this worked, by the way, was that the firms had to show that in the previous year they had employed less than 50 workers. And based on that assessment, they became eligible for credit, and then they proposed their projects for funding. The panel of data that we have consists of almost 3,000 workers, 3,000 firms with about 6,000 observations. It's unbalanced panel after we do all sorts of first differencing and taking account of lags. So what we also do is that we take advantage of the calculation of total factor productivity and capital stock measured by another paper that I've written with another colleague, Dr. Yousefi. In this paper, what we do is that we estimate a model of employment, capital accumulation, etc. And we find that the policy seems to have had short-term effects on capital accumulation. It increased capital accumulation in the short run, but no direct impact on employment. There was indirect impact in the sense that because of capital accumulation, that led to more employment and more production. But even that was very short-term because there's both diminishing returns and also very strong mean reversion in capital accumulation. So once capital stock went up, the following year, it actually returned quickly to its own old path with rapid speed, and as a result, the impact on employment ended up being relatively short term. In a big part of the credit seems to have been channeled to buying land, which seems to have had, in fact, adverse consequences for employment and production. In fact, in the model that we estimate, we find that having more land has negative impact on employment and production, which indicates that the money was used for asset accumulation more as in a form of speculation rather than as a means of production. Why did this happen? We argue in the paper that this was in the context of haphazard policy implementation. There was also other policies that destabilized the macroeconomy, created inflation, and that motivated firms to use their resources towards land accumulation rather than using it towards increasing production. Now, the method that we use is difference in difference, comparing the two groups of firms that I mentioned. The control group is 50 to 54. Since the policy actually ended after 2008, although we look at firms that were eligible until 2010, but in fact, we find that firms, even small firms below 50, after 2008 were not really affected, did not accumulate capital or did not change their employment as a result of this policy. And that group also can be treated with firms that were small after 2008 could also be viewed as control group as well, as we will see. So in terms of technique, we estimate a dynamic model using the Alorano bond technique. We use this technique particularly because our panel is short in terms of time, and because of the time dimension being short, we need to make sure that if lag values are included in the dynamic panel, they do not cause bias in estimates. So that's the advantage of that technique. And the key aspect here is to use lag values of the dependent and independent variable as instruments, and we work with the selection of instruments to make sure that the in terms of exogeneity, in terms of over-identification and autocorrelation, the estimates are sound. And the technique has a particular aspect which is called collapse, which we use in order to reduce the number of instruments that we use as much as possible. And then we do sensitivity analysis. For example, one of the key sensitivity analysis steps that we take is to drop the firms that were 49 and 50, had 49 and 50 workers in the middle, just in case there might be some error in identifying whether the firm it has been below 50 or above 50. And again, the results are reproduced. We also do other sensitivity analysis, which because of the short of time, I'm just going to skip at this point. And let me also show you how the equation that we estimate. Take, for example, a factor F in firm I in industry J in year T. So the change in the amount of that factor, let's say that's labor or capital or productivity, it would depend on past values, like values of that factor and other factors, and also on probably past innovations in those factors, as well as some fixed effects, industry fixed effects, for example, time fixed effects, etc. What we do in order to identify the effect of the policy, we create this dummy S, which says that if whether the firm was small in the previous year or not, and if for the years of the policy, which were after 2006, we try to interact the firms that were less than 50 in the previous year with the year dummy, and also continue tracking down those firms. So firms that were small, for example, in 2005, we look at them in 2006 and 2007 and 2008 to see what happened to their employment compared to the control group. And here's what we get in terms of results. When we estimate, for example, the amount of labor depends on productivity, depends on, so we do get a positive effect, for example, here, or for, the change in productivity factor also seems to matter. The labor level in the past has negative effect. This is the mean reversion effect. We also have a regression of production regressed on its past values as well as on productivity and other factors, similarly for the productivity variable. And these all are characteristics of a mean reverting process. For example, for productivity, mean reversion seems to be quite strong. Productivity does have a positive impact on labor, on production, etc. So these are the three regressions. I'm following up those regressions for labor, production, and productivity. And what we find is that investment in machinery, for example, does have an impact on both labor, on employment, and production. But when it comes to buildings, the impact seems to be smaller and more limited. Investment in buildings seems to have an positive impact for labor in the short run, and it's also its innovation that has an impact, not the level. But as you can see here, investment in land has negative effects on employment and production. Now, we also look at control for output price or real wages, and real wages seem to reduce employment, and real output prices do seem to have a positive effect, which is the supply effect. So all these things seem to work well and suggest that the model generally is working. These these are diagnostic tests, etc., which all indicate the regressions are sound. Now, here's the main result. When we look at the dummy for firm being small in the previous year, let's take a firm that was small in 2005. So we look at the firm in 2006, and we see that there's not been much impact in 2006 in terms of employment of firms that were small compared to the firms that were above 50 in that year. There are some, in the next year, there seems to have been some reduction in employment. So that's something to explain and discuss, but what we don't see here is that firms that had become eligible in 2006 to borrow more don't seem to have employed more workers, and their production doesn't seem to have gone up either. If we follow this for other years, for example, let's take the firms that were small in 2008, and we look at them in 2009, what happened to them? There's no difference between small firms below 50 and firms above 50. But if we look at the regressions for capital formation, the changes in capital formation, machinery, buildings, etc. Again, we start by starting to show the impact of productivity factor in capital accumulation. Productivity seems to have some very positive impact on machinery accumulation, a short-term effect on capital accumulation in buildings, but not productivity doesn't seem to affect land accumulation. And then we have these negative effects of the past, the lag values of the level of each type of capital, which is again suggesting mean reversion. We can also look at the impact of whether having more labor in the past might have had some effect, which it doesn't. This is just a control to make sure that we've controlled for the size of the firm. And price effect seems to be strong in case of machinery accumulation, but not in the case of building or land accumulation. So firms seem to respond to prices, for example, by investing more, but in machinery, but not in terms of buildings or land. So those assets seem to have other purposes than rather than contributing to production or employment.
Sorry to interrupt, Hadi. You have to conclude, please.
Sure. So let me just show here a key result. Firms that were small in 2005, you look at them in 2006, compared to the firms that were above 50. And you can see here that they accumulated all sorts of capital in that year. In the following year, firms that were small in 2006, in 2007 bought more land. But becoming eligible for these loans seemed to enable firms to invest. First, they invest in all sorts of capital. The second year, they invest only in land, and then there's no positive effect any longer, which indicates that when the credit facility was provided to these firms, all they did was to initially, for the first year, they did invest in capital. There wasn't much impact on labor. There may have been some indirect effect on labor and employment in the following years due to increased capital accumulation in machinery, and a little bit due to increased investment in buildings. But land was the key form of capital accumulation, and that had negative effect. And as I mentioned before, to conclude, it seems that the macroeconomic environment created, and also the haphazard way the policy was implemented, which we discuss in much more detail in the paper, had motivated the firms to just invest in land rather than in real production and increased productivity. So thank you very much.
Thank you, Hadi. Thank you, Bedri, for this clear presentation. We would love to have more time, but we have very limited time, so sorry for a short presentation. Yeah, let me put my, okay. So I will share my very small discussion that I have here. Okay. Okay, can you see my slide?
Yes.
Yeah?
Yes.
It's okay? Hadi, Bedri, okay. So I have a few, I have a general comment and very few specific comments. So we have two papers dealing with the same issues on SMEs. So I'm going to go very quickly because I prefer to keep time for the Q&A. So I am not going to talk again about the methodology, but only to let you know that about the methodology that both of you have used a very large database. And for the first paper, for the Bedri paper, you use the World Bank and the DG Waste data for a couple of European countries. And you have also this very huge database about TED and for the year 2006, 2007. And you did many estimates with different specification and different controls. And for the Hadi paper, it's also a very good and deep methodology that you have used with this data panel data set about Iran for this 2003, 2013, and you have almost 30,000 company and more, almost 150,000 observations. So this is very huge. And you have also used a different estimate and with different also sensitivity analysis with different control to estimate the production function of each industry. And as we have seen, you have implemented this GMM dynamic panel estimator. So these two papers are very interesting, and I really enjoyed reading your paper. And for the region, but not only for the region, it's a very relevant topic about SMEs. And we know that SMEs in our region is significant. This SME sector is significant in terms of its contribution to GDP and employment. And we know also that SMEs face many kinds of constraints, administrative constraints, financial constraints, as you have well mentioned during your presentation and also in your paper. So let's move to the first paper, only few comments. And Badri, in your paper, you didn't really mention the difference between SMEs in MENA region and SMEs in European countries. And you use this very huge database about SMEs in European countries, but we have a quite difference in terms of workforce, in terms of turnover, and it will be nice to discuss also, the difference between SMEs in MENA countries and SMEs in the European countries. And also, it will be nice also to give more details about the methodology that you have used to quantify the effect of improving procurement in many countries. You find this very different and we have a huge score for a couple of countries like Iran and Morocco, and how, of course, we have this explanation in terms of quality, procurement quality, but it will be nice also to give more information about this difference in terms of score between these countries.
Yes.
And yeah, and what about also, and this is the same question that I have also for Hadi about SMEs operating in informal sectors, and it will be also relevant also to discuss the reform implemented in the region to increase SMEs participation. Very quickly, for Hadi papers, Hadi and Ami Hussein papers, I didn't find information about the size. Of course, we have your sample size, but what about the control group and treatment group? And for the firm size 45, 49, and for the control group firm size 50 to 54. And also you mentioned this very huge number, about almost 40% of the provided financial resources were deviated. And is there any restriction, more restriction now, or any difference in terms of rules, of regulation? And what about also tax policy? And yeah, it will be, I guess, relevant also to discuss also if there is any difference in terms of tax policy linked to the size, to the firm size, and also about informal sector. Thank you. So please, if you want to answer a few questions, feel very free. And so we have only 7 minutes for you, and if you have 1 or 2 minutes, also maybe to take some question. Thank you.
Thanks a lot for your comment. Can I answer very quickly your
yes,
comments?
Of course, okay. Please.
Yes, thanks for your comments. Yes, we have been thinking about the difference between the European Union and the MENA region, especially the structure of the countries. We are limited with the data that we have. So what we try to do is we would like to get this extensive data set about the European Union. So we have 31 countries there. And even though this is Europe, many countries have very different characteristics, even in the EU. So that means that we have some countries with very poor public procurement regulation scores in the EU. So we have data about it. So we try to use that variation among between Italy and UK or Iceland or Poland. Their scores are very different. So even though these are European countries, some of them have poor public procurement practices and some of them have very good practices. So we could at least measure the impact of regulation quality on SME participation, but we couldn't control for firm characteristics. So we don't have a data for that. I know that Bernard is working on another project. So he is trying to match firm characteristics in the data set, but currently we don't have that. So we could, as you mentioned, it would be very nice. It's a very nice observation. It would be very good to be able to control for firm characteristics, but we couldn't do that because we don't have data about it. And for the difference between Morocco, Iran, and Sudan, so this is a extensive project conducted by the World Bank. So at the World Bank paper, they have all the details, like they have pages of questionnaires and how they did that. So what they do is basically they find these experts, authorities about public procurement, and also they talk to firms that actively participate in public procurement. And they send these questionnaires, and using those questionnaires, they construct these scores. So I guess so. The methodology is in detail described in the World Bank paper. So we didn't want to replicate it, but so I think they did a good job, the World Bank, I guess so. But so the difference between Morocco and Sudan is because of the questionnaires. So the results came that way. But I'm not an expert on these countries, but we trusted the World Bank people on that. But maybe you might have some
Yes,
insights.
thank you, Badri. Just about Morocco, there is a huge reform of procurement, so maybe you can see.
Yeah, actually, we should do that. We could that might be another project. So we could like analyze in detail all these many countries. But for this one, we had the data and we conducted the empirical analysis. But that would be great. And last thing, for the informal sector, so it is also very hard for firms in the informal sector to participate in public procurement. Usually, I know from Turkey, they need to get a tax number and they need to be registered. So that's why they're out. And yes, thank you. Thanks a lot.
Thank you, Badri. Let's give the last minutes to Hadi.
Thank you very much, Najat, for your comments. That good suggestions. I should have separated how many firms below 50, how many firms above 50. That's a great idea. Also, in terms of what happened to the policy was, of course, focused on providing more credit for small firms during 2005 to 2008 and a little bit afterwards. And they got rid of that policy, although more recently, again, the government has gone back to try to pressure the banks or sort of suggest or induce the banks to lend more to small firms, but not with the same pressure, with the same zeal and scale that happened in 2005 through 2008. In terms of tax policy, I have not looked into it in any detail. My expectation is that there's not much difference between the two types of firms, just below 50 and just above 50 in terms of tax policy, but that's something to think about and see whether there was any other changes that might explain what happened. Thank you.
Okay. Badri, Hadi, I would like to thank you again for your presentation and for this exchange. And I would like also to thank ERF and all the participants at the ERF webinar. Just to tell you that this webinar is recorded and you can watch it on YouTube. So thank you everyone, Badri and Hadi, and also the other participants. I hope to see all of you maybe next ERF conference in Egypt. And I thank you. I don't know if the other participants can, but I thank you. Thank you very much.
Thank you.
Take care. Thank you,
You too.
Nafis. And thank again ERF, and take care and have a nice day. Bye.
You too. Bye.